Start my stream. So a quick rundown, we're going to review the previous day, that's current day on the assets. So we'll go over what I was looking for, why I was looking for it, what happened. So yesterday, we were looking for price to trade lower into these failure swings here, which we did have. If we go to our hourly, take a look, we do get that move lower, right? And then this is the candle that tells you the reaction, right? Because if we have expansion into a low, right, or through these lows, there's a few things that's going to happen. We're either going to expand lower and then consolidate, in which we can either manipulate and go the other way, or we have a consolidation, manipulation to continue. So that's consolidation. We can expand into a low. We can then get a retracement, which is a slow, shallow move, ideally not closing back in the range. And then we can get a continuation lower, or we can expand, met with expansion, which is then a reversal to trade back to the highs. So if you're looking at this candle here, what does this close tell you? Well, that's a candle 3 closure. It's also closing back inside this range that we have taken out. So with that, you can anticipate this to form a reversal and trade to the highs. So then we get that move to the highs, in which we are getting a continuation currently of that move. So that is for indices. If there's any questions on that, we can get to that. As for gold and silver, I'm still anticipating these to go take out the lows. I think it's very sus that they just leave these lows right here and not take them out. So looking for gold and silver to trade lower, but just talking about that in review to yesterday. If we go ahead and take a look at this, we have a daily candle 2 closure right here, as we have taken out this high, close back in. Is that paired with a change in the state of delivery? Well, we go ahead and find our high here that made this wick. We find the series of up close candles. In this case, it's only one. So marking out the one candle that is up close there. We close below it. So with this closure, we have the change in the state of delivery. We can then seek entries in this following candle. So that is why I was bearish. We have a candle 2 closure, and then we have these lows down here, right? Now, going into the next candle, if we're waiting for that intra-candle change in the state of delivery, we want to use the T-spot to have this wick form. We find a point of interest, and then we have our entry sequence, which is a swing forming, right? So we have a candle 2 closure. That would be the first opportunity. And then when we close below here, that is then confirming, or my anticipation, that this wick is going to hold. So inside this wick, I'm expecting it to hold, and then we can expand lower. So after this, any swing point is valid to short that. Now, the reason I selected this area as a draw of liquidity and not expecting this low to get taken is just from the daily range. So if we go back to our daily chart here, it's quite a bit of range to go reach for this low. But most importantly, the reason I had this marked out and not the low is this low had swept these lows to its left. So that is high resistance liquidity. So it's going to be a little bit harder to go take out this low versus if it was just a failure swing. And that's when I can use 0.5 of that wick. And that is what I used as a target. Now with gold, I was slightly off in the analysis. Go to the daily real quick. I was correct, but right, we had this closure below here. As I was explaining yesterday, it's a little bit more discretionary on anticipating this expansion on this day, just because we are internal to this range. But it comes down to, we have failure swings off these lows that are a nice target, and that's why I'm still expecting a continuation here. And we could even reach down into these lows here. Now, going to our hourly, where do I expect this to form? Well, I want to see the lower half of this candle here, right? Respect, as well as this up close candle, right? So I was looking for anywhere in this area to respect. I was ideally going to have price open up, sweep out this high, and then drop lower. And the reason for that is I didn't trust this high because we don't have a nice reaction off of it. If we would have swept out, closed below, I expect this to hold. But the fact that we just consolidate here, I expect it to get ran out and then make the move. However, you can see, we just sweep out this high right here. close below this up close candle here, and continue lower. So at the time in Asia, I was expecting this to get taken out. However, after we sweep out this high, we close below, start to trade away. It doesn't make sense to anticipate this high to get taken out if we're expecting it to go lower, right? We just want to see it have this form the high and get a continuation. And so then from there, I'm expecting this wick to have formed, right? And then from there, I can trade away from that with any swing points going into the day. Now, as for oil, we talked about it. I was looking for these lows to get taken out, as I said yesterday. And the reason for that is we have candle 2, candle 3, candle 4. We have 2 expansion days, and generally we normally cap it at 3, so I could get 1 more expansion day. We have a small wick form, and that's why I was saying initially I want to see this low, and then how we trade through that low tells us if we're going to see this. So if we go down to the hourly chart, right? How do we trade through these lows, right? I'm taking a look. We trade through this low. Is this expansion met with expansion? At first, it looks decent, right? We have expansion down, expansion up. But with that, we'd have to respect this area. We obviously don't, right? So once we come close below here, that red, we're realizing we're not expanding back into the range, because if we were to expand back into the range, price would have never closed below here. It would have had a shallow run here to then continue higher and form this reversal off the previous day low. So once this fails, that's when I'm expecting us to trade lower to these other objectives, right? So we replay this first close here. You can see this is fine. It digs a little deeper, but it still can be respecting 50% of these down close candles. But on this next one, very obviously that is failing. I'm expecting what? Now these lows. So then it's a bit messy, but we go and take out those lows. Now with oil, I'm not very interested in anything going into the end of this week. And the reason for that is our whole goal is to trade expansions, right? So if our goal is to trade expansions and price already expanded, that's when we want to sit back and let it tell us what's happening, right? Because once again, if we have an expansion, we have 1, 2, 3 days, right? We can then expect a new phase of price delivery. So what would I want to see if I did want to trade this? The only way I would trade this is if we form a reversal off this previous day low, or have an SMT with RB off this low, and then trading it back towards the weekly open, because I'm not trying to trade short after we've already expanded short, right? So that's the only way I would look to frame anything, but most likely I'm going to let this go as it's already had the expansion, right? If you catch something in there, that's great. If you miss it, you just missed it. So any specific questions? I think we covered most of the assets there. Did I cover silver? I did cover silver. Cover gold. Did. Still expecting this low to get taken. Right. So let's see. Any questions there? Let's see. No, I didn't take them all. I can go over. I did short silver. Go back here. I just had some problems with the execution. I can talk about it. We go into here. I'll show you. Right, I was expecting silver to form the high here. We go into here. Right, go to our 5-minute. Show you where I shorted it. Right, I'm expecting this to hold. We close. Let's see. It lets me open. Not letting me replay. Anyways, we'll just scroll back. Right, I'm expecting this to trade lower. Right, that was my whole idea. And so we have a candle to closure here on the hourly. That's aligning with the new 4-hour candle, aligning with the wick of the daily. So for me, I entered positionally here. I had my stop above this, and then initially looking for 2R, but my whole plan was to trade this through this low and then down to here, right? So 7R. What happened was I was also scalping some NQ, and you can see never hit my stop loss. But in here, I was scalping NQ on TradeAvate, and I hit cancel all orders or close all, not thinking about it. And so then when I came back expecting to see my TPs hit, I realized that I took a 0.5R loss and exited right here. So need to review that, but that is what happened there. So that was the one that I took. So a little mess up on the execution and some order stuff, which is a bit frustrating, but it's just stuff happens. But otherwise would have been a pretty solid trade because I, been that, which for 7R, 7.5R, and the 2R would have been hit here for the initial position, right? So that is the one I did take. Obviously, I can pull it up, but took a loss on it, unfortunately. Let's see. What model am I using? I'm using my fractal model. Let's see. Does T ever lose? Yes, I lose. I just showed you obviously that's probably the most unfortunate way to lose, which was very frustrating. I talked to AM about it this morning as well. But with that loss, I still was fine on the day because I was just scalping some NQ to get back into things. And go over it. Took this. I took some shorts in here. This was just scalping, so it was more discretionary. But we can replay a little. And just took, basically, it's a downtrend, so when we formed highs, I just shorted these moves, and then probably not going to let me replay. But find it. I took this long in here. Actually, on the 1 minute, is just a very basic. We have a range, make a V shape, and then it's down close candles. Right, so from there it's just, right, it wasn't that one, this one. Right, and then that's the continuation. This one, if we take a look, it was, we pull up the 15-minute, I'll show you. It was almost a candle 3 closure, it wasn't, but it's still enough. So yeah, it wasn't much. Silver was the only actual. Those were I was sizing very, very small, so it didn't matter. It was more so to get back in the flow. Entry from NQ today. Yeah, Asia session. I'm not going to trade Asia session again. It was just because I was getting back into the flow of things. I just sized really small, or not really small, but fairly small, and just was clicking buttons essentially. So that way when I actually need to click the button, I'm just in the flow. I don't know how to really explain it besides it's just something that helps me if I haven't taken a trade in a minute. I just take a few trades so I'm not overthinking it. Alright, let me get back here. I hate NinjaTrader. Why don't you trade on TV? I was trading on TV. The only thing is if you're trading Asia session or basically lower time frames, you have a little delay on TV, right? So it's you'll see this gap down here like that, a second or two after it happens, which is a bit annoying to me. So I usually, if I'm ever doing anything like that, I just go on to TradeAvate. And so that's why I was on there. So it's the silver trade I actually put on here. But let's go back here. Yeah, it was a bit annoying of a day for me. It's not like I made money, but it was like more annoying than losing money, if that makes sense. I understand swing points and everything like that on the higher time frame. I understand that we want to see price trade into a point of interest. If there's no fair value gap or high, it's usually the range, the CSD. Why does that price trace back into the area on the picture below? So silver, target 4-hour chart. Let's go take a look. Silver, 4-hour. Don't need an alert. You're talking about why did silver trade back up here? So obviously you have a weekly swing point. This is a weekly 4-hour model, which is great. I always focus on the daily chart. And so I went over this in my analysis yesterday before this moved down. We can talk about it again. Just that over there to make this bigger. So what I talked about then was we have expansion. Do we retrace, right, to continue higher? Do we consolidate, or do we form a reversal? Well, right here, this is just a consolidation, right? We take out the low in the consolidation, expand over. So now I'm thinking, okay, we manipulated, but we've already reached over. If we are going to get a continuation higher, right, it would have to form a down close candle, close over, then I can trade it higher, right? If it's going to form a reversal, it's going to come back and close back in the range. Here we close back in the range. And this is what I talked about, is we have swept out these highs, we have a candle 2 closure. If we're expecting this to form a reversal, we don't expect this high to get returned to, right? So if this high is not going to get returned to, and then we're going to form a reversal in here, right? Where does it occur? It's just back into the range, right? There's not really a point of interest here. And what I was talking about is, if you look at these candles, right, we have up, down, up, down, up, down, up, right? So it's like we have this displacement down that then it retraces back into. So what I was talking about yesterday is this move here to here is going to be, you know, imposing candles on a lower time frame. And then about 0.5 of that is going to be like that change in the state delivery area, right? So what happens is we have a bullish candle 2 that fails, bearish candle 2, that's the actual move, right? But you could trade this either way. So we drop to the hourly, the daily here, right? I'll show you what I mean. Is here we have that bullish candle 2, right? So this forms a reversal. You could technically trade this higher, right? But this is the more interesting because it's trading back into the range, right? And what was I talking about in the higher time frame? This move here to here, right? That's what's giving that support. It's a bit cleaner on the 4-hour because if we take a look, I was talking about from this low to that high. We mark out the opposing candles there. Change in state delivery. Mark out 0.5 of that. Right? It's that. So that's why it went back into the range. But I wouldn't say try to predict those things, right? Just look at how it closes and then react, right? Like right here. Am I expecting this day to be bearish? No, I'm expecting it to be bullish because this candle closed like this. I'm expecting it to be bullish. I let it close. Now it's in line with my bias. Right? All right, let's see. Thoughts on NQ reaching 20.043 before going. You just mean 0.4. You just mean the high? I mean, yeah, I would say that's where price is reaching for. Because if we take a look at this, we swept out all the lows, closed very bullish. Unless we're going to do absolutely nothing today, this is where it makes sense for price to reach for. Silver short, yeah, the silver short was a bit tough. A bit annoying, honestly. If we've already expanded to the highs on NQ, should we anticipate price going lower? No, just because price goes in one direction doesn't mean you should try to fade that, right? Like when this is dropping lower, should you try to fade it? Probably not, right? My whole model is based off of continuation. But currently, what is that saying? It says we have a candle 2 closure here, so it's bullish. I can show you that by putting on my indicator, going to the hourly, and right, it's saying it's bullish, right? And since this is a large manipulation, you could look for the first standard deviation as a target, which is just over that high we were just talking about, right? Now, the only thing is it's opening up higher, right? So what would I ideally like to see? I wouldn't mind us just trading higher into this high. And then as we approach maybe like London or late New York, forming a reversal, trading back into here. Like that'd be cool. But obviously I don't predict the future. I just react to it. So. Can you go over how to catch the move down this minor NQ? Yeah, sure. So you're talking about this move here. So we all know I was pretty bearish on NQ here, right? From my analysis, what do we notice? We start to make a move lower. We can't close below here, right? So when we go back higher, we want to take out highs. We go make a new daily wick, right? Cool. So we didn't really make much of a wick. So from here, once we start to trade lower, I can expect this to trade lower. So there's two ways I can go about it. I can use the hourly, right here. Check and then go to the 5 minute, right? And you can see even that forms a model. We have a sweep, closure, and then how would I do this? I'm expecting this price to hold. Do I have a point of interest? I do. I have a fair value gap. I have an intra-candle change in the state of delivery. I do, right there. So then I could look to trade this continuation here. I stop there. Where is 2R? There's 2R. And then you could hold runners, which you either get stopped out break even, or if you just hold your stop, depending on how much you take off, looking for the lows right there, right? So that's the hourly and 5 minute. Or you could go to the 30, right? And you notice right here, we have a very nice closure on the 30. We reach into a fair value gap, have a nice closure. So in this next candle, I could be looking at the 30 and 3 minute. I go to the 3 minute. And we'll do this real quick and just replay it. Right, this one could get you in a bit earlier or right around the same spot. I would say it's a bit cleaner in this continuation. Right, but we reach up into a fair value gap. It's not great because we've already taken out this low. So I'd probably let this pass. Then C4, what do? We reach up into this fair value gap. We touch that, so we have a point of interest. And then we have, this is an ideal candle 2 closure. Right, so then you could basically take the exact same trade from the 5 minute, right? But it is a bit cleaner, right? And then if you wanted to hold that to the hourly lows, or these lows, like there's 13R, so you add 5R, or even previous day low, 6R. How do we learn narrative? I think I find myself lost too often. So it's really just comes down to the daily chart. How often are you correct with your reading on the daily chart? And that's it. So like for instance, yesterday made a lot of sense to me, right? On every asset. If you noticed, I think I was correct on all my bias, right? I was asleep for, go back to our hourly, daily, right? So yesterday, like I expected this move to here, right? So I got that. I was asleep, didn't expect that, right? I would have preferred if this just formed a reversal and then opened up so I could have longed this, right? Didn't happen. Gold, I was expecting this move lower, still expecting it to go lower, right? So got that. Silver, this was the cleanest, right? With the intra-candle chain of state delivery, moves lower, right? Oil, right? So it's like there's days where I have all my bias correct. Yesterday, every single one correct. On the general day, I'll maybe know what 1 or 2 is doing, right? And then there's some days where I don't know what is going on at all, right? So the way to practice this is just practice on the daily chart, on the hourly, 4 hour even, and just anticipate the daily candle, right? Because all trading is if you can anticipate the direction of this next candle, this one here, you can get trades in there, right? If you're wrong with that, that's fine, but just learn, right? Learn from it, journal it. Because the whole thing is just, can you anticipate this next daily candle? Like right here, can I anticipate this next daily candle? I'm anticipating it to go lower, right? mainly based off of leaving that low, but I'm more focused on gold, right? So if I can anticipate gold here, can I get an entry in there, right? So the first step is learning to anticipate the direction of the daily candle. Once you can get that down, it's all about entries and execution, right? So your narrative, entries and execution is probably the easier part due to my model because it's just very mechanical in its process. But once you can get this down, then it kind of aligns, right? So I'd say just practice that over and over. See which days make sense, what they don't, when they don't. When they don't make sense, don't look at them, right? Just watch it, see what happens, say, oh, okay, why? Can you learn anything from it? You can manage trades in different ways. It depends on where you expect it to go, right? So let's say I'm shorting NQ in here. I'm very confident, let's say, in price at least going for this previous day low, right? In here. Well, then maybe I'm not partialing at 2R, right? And I'm just holding for those lows, right? There's different decisions you have to make based off the confidence in your trade. If you don't understand that yet, then maybe just take everything off at 2R, and then you can journal it after. So much was done by 8 a.m. candle on NQ. How would you approach the day after that? So really, if unless you're gonna trade long off of these lows on NQ or ES based off this closure back in, right, and then trading this continuation in here, there's really nothing to do, right? So if you go back into my messages yesterday, I was saying, okay, if we are going to form a reversal, it's going to happen at 9:30 or 10. Go to 9:30, go to 10, right? Did 9:30 form a reversal? No, it traded lower. Did 10 form a reversal? Yes, right? Then I can trade the continuation following that, right? But unless you're going to trade that and you anticipate that move off the lows, there's really nothing to do. There's no reason that I would want to long gold yesterday or long silver. You know, they made this move back up. Would I anticipate that? No, I wouldn't. And I'm not trading that. So it's like there's one thing that you could trade probably after that in the New York session, which I think AM caught the longs. But and yeah, the long is valid with my model. Let's talk about that real quick. You can see we have a candle 3 closure here. Remove these drawings. And then we'll go to our 5-minute. We'll go into here. Right, it's gonna form right in here. So the only tricky thing here is, do you trust these lows, right? But we do have it because candle 2 forms a sweep, closure, over, right? On the close of this candle, we anticipate it to continue, right? So mechanically speaking, you can trust this low to hold. So then at the open of this next candle, right, I could either enter or let it close and then have my stop there, right? Personally, if I'm going to take something like this and I'm trusting this low to hold, I'm just going to enter on the open of the candle because that's going to give me plenty more risk to reward, right? Or if I don't trust that, what I can do is either wait for a new hourly or a 30-minute swing. Okay, so if we form a new 30-minute swing here, and I trade off of that, go to the 3-minute, went ahead there a little. Right, let me go back. If it lets me, there it goes. So we have a model here, right? Candle 2 closure. We have this reaches in. If this is going to trade higher, I expect this low to hold, right? And right there, it fails, right? So this is one where it fails. It would be a valid long entry, right? Sweeps out. And then here's the long that actually works, right? That could be a bit tricky, could take a loss in there, but then it does get the continuation, right? Or you just wait for the hourly, which would be here. Do I trade outside of my model? Very rarely. If I do, it's basically the same thing because the model essentially teaches you how to read price action, right? So it's like I'm just trading swing points, but very rarely do I do that. Almost never. Me scalping yesterday, that was the first time I've scalped or done that in maybe like 3 months or so. And that was really just I hadn't taken a trade in 2 weeks. So I was like, if I do that, then I tend to overthink, right? So it's like I'll come back to trading, like if I take a week or two break or something like that, and then my entry will present itself, and I tend to overthink it. So what I like to do then is that's why I did it. Is I was just like getting it out of the way almost. It's like you jumping in the water. So it's like, oh, I already clicked a button today. It is what it is. That's why I did that. And that's why I was sized very low. So it was like the trades didn't really matter to me. It was more of a mindset thing versus hey, I'm trading this. It's a bit like, I don't know. As you continue to trade, you'll begin to learn more things about yourself and like little tendencies you have, and then you can learn how to sort through those. Like that's a little tendency I have where it's like if I haven't taken a trade in a little bit of time, then I tend to overthink the next trade. So if I size down to essentially not nothing, but if I size down and then take something, literally anything, then I'm not overthinking, right? So I stop thinking about it. I don't know if that makes any sense. It's lots of stuff that's like no one really talks about, but it's like you have to learn it personally. It's like the same thing I can talk about. I used to, in 2022, I had a fear of entering trades, right? And the way I got over that was I just bought evaluation accounts and I flipped a coin and then traded it, right? And so I just sat there and just flipped a coin. I had no control. And I was like, oh, eventually I like clicked the button enough where I just didn't really care. But it's just like random tendencies and like psychology things that, that might not make sense to someone, right? But it helps me. I don't know. Let's see. Lost 1 hour on Tuesday across accounts. Definitely feel great. I told you that if it hit, you've talked about it a lot. Like in my opinion, you're honestly sized heavier than you should be, but that's just my opinion. I catch myself waiting for invalidation on the 4 hour. Would you say it's better to change watching hourly? So that's completely dependent on you. I have just always within my model gone daily to hourly, right? So like if we have silver, for example, like this is something where it's like when I see this type of setup, it makes a lot of sense to me because I've seen it so many times, right? Versus for some people, using the 4 hour might make more sense, something like that. I just like to see the daily profile and the hourly and the swings, and maybe that's just because I'm used to it. I would say do what works for you. Would I be shorting the bottom on gold here? Take a look. If I was to short gold, I would be using a 30-minute and 3-minute model and then looking to trade off of that. But I would try to be in near the highs, which wouldn't have given you an opportunity unless you traded more discretionarily, right? Because if we go back here, I'm wanting to short around the open of this candle, right? Which we have yet to have change in state delivery this way, right? By the time we have this change in state delivery, get ahead here, right? We're basically already taking out this low, which is less than ideal, right? So unless I'm taking something like this, which is more discretionary, right? And then holding runners, like I wouldn't personally try and short this just because this is where I would take most of my losses. Because we sweep the short-term low, like I would get short and then it would give another sweep. So if I was to trade something like this, that's kind of how I would do it. And this is just, you'll notice I'm a bit more conservative in my approach to entries. Like, I don't like entering after these short-term lows are taken out, because the amount of times doesn't happen here, but like it would be something like this. Takes the short-term low, you enter here, it stops you out and then goes. The amount of times that happens is a lot, so it's like I just avoid it. But I do think gold drops here. Right? It's just like I said, this would be the only entry I would have taken, and that's even more discretionary because we don't have the model forming. Right? So I think it's still valid. Right? It's just one thing. Solar doesn't help. Like, I don't know. I would have wanted to see something like that. You know, that it makes it a lot more trustworthy to me. That little wick. So, it's something I'm fine with missing. But I do think it's also valid. Just depends on how you like to trade it. Gold lost Tuesday, 9:30 C2. Gold lost 9:30 Tuesday. You said 5-minute? Tuesday. Somewhere in here. I gotta go view the daily. I mean, that's a... I personally wouldn't be... Did you short or long? 33. I mean, I'm personally not shorting that. I would be more interested in long golds that day because of the daily candle. Look at this, ready? I just look at the previous candle. Is this candle more bullish or bearish? I mean, it's more bullish to me, so I would be more so interested in looking long. Aiden, was it a short or a long? 30? I'm assuming you took this. There. 30. 3-minute. If it replays. So there's one thing I'll tell you about this. Besides the daily thing, your entry was somewhere like this, assuming, like that. Or maybe you took the retest, maybe you had your stop up here. Wherever you had it, that's your trade you took, yeah. The biggest thing is what I just talked about with gold. You see how this is exactly why. Yeah, we already took out this low. Just gonna clean up the charts here so you can see. See how you're trying to short after we already took out this low? That's why I'm more conservative when I see that. If this low was left, something like that, then I'm all for that. Right? It's just I've seen it enough where I take a loss like that, where I just avoid it. Like even going back to gold right now. Like, you see what I mean? Why I would avoid taking an entry after this, before this, for sure. Right? It's just something that happens to me. Do I think we go take out this low? Yeah. That's the only thing I would say on your trade. And like, yes, you're gonna miss moves. Right? Like you will miss, like I'll miss this move here. Do I think it goes there? Yeah. Will I miss it? Yeah. But it's just something that I do that saves me a lot of headache. Because most of my good trades don't have this. So it's just stuff that I miss out on. Let's see. Scrolling up. Love the analysis. Glad. What I'm here for. Would you swing based on your model since the daily has a nice candle 2 closure? So there are times where I will swing. A lot of times I'll do it with options. I would have done it. It's just hard because I'm in Asia time zone right now, living. But if we would have had this candle close not so expanded, right? So see how we already took out the high as well? We took out the lows, we took out the highs. If we would have left these highs, that's something where I will swing overnight. It's very hard for me to swing or like at the close entering at the highs. I'm just not a fan of that because I then would rather just wait for a retracement to get long. Right, so a better example would be like almost like this one. Once again, this is the same thing. We're just going to go to the hour so I can explain it better. Do I want to be entering or swinging? Maybe if I get an entry in here, sure, if that's what you mean. Do I want to be entering above these highs? No. So you see the difference in a daily setup like this where we're closing over that high versus this setup? Or if we go back here on the hourly, even at the close there, I could enter and I'm before this low is taken out, right? So if I can get an entry prior to these highs getting taken out, sure, I'm fine swinging that, especially with that close. It gives me more confidence, but I'm not trying to enter at the close. So on 1 hour, you're calling the 10 a.m. candle a candle 3 closure. Yeah, so let me review that real quick. Going back here. Why is this? Oh, I messed up. It's a candle 2 closure. My bad. It took out this low. Right? So it's a candle 2 closure. I was misviewing it. My eyes were seeing this. In that case, it would be a candle 3 closure. So I was wrong there. Thank you for the correction. Do you have to wait for a new OB on the next candle, or can you use the OB that was formed? You can use the OB that was formed. Let's go back to gold here. Use something like the 3-minute, right? Maybe a better example. Actually, we're gonna go to the silver trade. Okay. So for instance, I can take a trade. I would be using this whole series up. I can take a trade off of this, right? Right. But I need to have my stop on this high or above an invalidation. What waiting for the new order block gives you is it gives you a new invalidation, which is then the wick of this candle, right? So similar to on the hourly here, right? Okay, I can trade off of this, sure. Right, let's say it closed up here, right? Like I could take a trade like that, right? Entering, once we get closed through, my stop above the CISD, right? Or if I'm waiting for this new intra-candle change in state delivery, what does that do? Allowing me to anticipate the formation of this wick, which then gives me the invalidation that I can use there, right? And that just improves my risk to reward. And that's just my whole model, right? That's the foundation of it. Why even use the daily chart when you can analyze better on the hourly? I can't analyze better on the hourly. The hourly is like where I get a better picture, right? So for instance, let's remove this. I'm only on the hourly here. Can I see the daily closures? Do I understand what the daily chart's doing? No. Right, like my whole model is based off of these higher time frame closures. So I need the daily chart to understand what the hourly is doing. Right, like if I go in here, do I see this long setup here? Not really. Right? Versus with my closures, I do. So it's like I need the closures. That's just my whole model. Right? That's like saying in here, hey, only use the 5-minute to anticipate this move here. I probably can't, right? Like the way my brain is trained and how I've come up with my model is using, oh, hey, we've swept this out. We have this ideal candle to closure. I can look short here. Now I can go down to the 5-minute. Right? So like I need the closures. That's how I analyze. I promise I'd be wrong a lot more if I don't use the daily. Like daily is like the chart I need. Yeah, this is being recorded. It will be posted in the WAP. The indicator that I'm using that's my personal indicator. So essentially it just marks out the flowchart section. If we see, it's just this. So it just marks out the setups, right? So that's like, for instance, like yesterday I see silver. I'm like, oh, we have a candle to closure in here in a point of interest. I know the structure. I know what I'm wanting to see. Right? I find myself getting stopped out on the short-term lows before reversal, like you mentioned. Can you talk about the logic of waiting for the continuation? I mean, it's just mainly going back to gold here. It's just the logic of I've gotten stopped out enough times taking a trade like this that I'm just going to let it pass if it does. Or if I'm trying to trade, I want to be in prior to that. Like that's what I've come to. You can trade the continuation following this, right? Let's say this forms. You can trade that. I just always prefer to be in prior to these lows getting taken out. It's just kind of a rule I have for myself. It saves me some from headache. Like my whole thing is this is your first target, it's your short-term target. So why you're trying to enter after your target? Like at that point you know you're late to the trade, but you're still taking it anyway. Like that's how I view it. I'm new here. I've watched all 3 Mortos. Which one could you be focused on? Most people, at least in fractal chat or using Garrett's model, you have to understand my model first. So I would say if you want to trade more like AM, then focus on his expansion model. If you want to trade more like me or Garrett, people in fractal chat, then focus on my model only first. Once you have my model mastered, then you can go to Garrett's. Can I show an example of MMXM? My whole model is MMXM. I just made it in a way where you don't have to think about anything. It's just mechanical. So right here, here's your original consolidation. You want to mark it out. Here's your smart money reversal up here. This is your low risk sell. First stage distribution, second stage distribution, or the silver bullet. Right there. This is your silver bullet. But guess what? You can learn this and trade this without understanding any MMXM because it's mechanical. So you'd only take that as a continuation if the low is left. Yeah, so if we go back to gold here, right? I'm trying to trade. Here's a good rule for it. If I'm trading the hourly or the 30-minute and 3 model or the hourly and that model, I'm trying to enter prior to these lows getting taken out. Because if we're going to form a reversal, where do we form reversals at? Lows. Right? So that's why I try to stay away. It's kind of like this. Right? If I'm trying to enter here, why I want to be in prior to these lows getting taken out. It's just, I don't know. It's just something you pick up when you see it enough where you're like, hey, why are all my losses like this? Okay, I'm just going to avoid that. You know? My first live stream of yours, unbelievably helpful. Glad to help out. I try to keep things very real in here. Right, so you'll see my frustrations, you'll see shit I deal with, all of that. Can you break down how to use the 1 hour with the phases of price to lock in bias and build a trade? I mean, it's the same thing as, I mean, it's kind of built in, but for instance, we'll just use silver for an example. The only time I'm looking to trade something is when I have a directional bias, right? So that's why it all starts with a daily. I'm only looking lower if I have an anticipation for a one-sided move, right? So right here, yesterday, one-sided move on silver. I know that. That means I can go to the hour or my lower time frame. That. Okay. That means in this time period, I'm expecting a one-sided bearish move. So with that, yes, I can use the phase of the price where I have this, right? We have expansion. So if we have expansion and we're expecting price to continue lower, we want to see what? Either a consolidation or a continuation or a retracement, right? And what does this look like? That is a retracement, goes to a point of interest, right? And then we have our intra-candle change in the state of delivery, right? So we have expansion, retracement, expecting more expansion, right? And that's just aligned with our higher time frame directional bias and all the things, right? So expansion, retracement, expansion, met with expansion. Most would consider this a reversal. I don't yet because we're just leaving these lows and that makes no sense to me. If we left those lows here, right? Like if we formed the reversal right there, sure, I could consider that. It's just we're so low to this, so close to this low, it doesn't make sense. But that's kind of how I use it is I'm expecting open, high, low, close. I can just say, okay, what is price doing in this leg, right? You cover the 9-10 a.m. C2 on still. What's SL? Silver? I don't know what silver is. Or not silver. What is SL? Is it S high? Silver? Doesn't look like it. I don't know. We'll get back to that. Silver? There is no 9 and 10 a.m. Oh, you mean this? That one there? Sure, that can be valid to look for. We can go and look at it. It's just for me, I just see that we already expanded. I don't know. I am definitely a bit more conservative in my approach, which makes me miss trades, but how it is. And of course, it's not going to let us replay. We're just going to go here. So we have a candle to closure here. Got a few things before it fails. We have a candle to closure here. What do we notice about this reversal structure? Who can tell me? Right, what do we want to see with a reversal structure? What do we see here? What are the things that are wrong with that? Failure swings, cool. Someone got the first one. So generally with a reversal, we don't want to see failure swings off the highs or those equal highs. The next one. It is a continuation signal to the upside. The other one is when we want to see a reversal, we want to see that V shape, right? So move higher, move lower, close below, and we can get that continuation. What do we notice about this? Consolidation. If we have a consolidation, it's similar to what I said earlier with gold. I want to see it swept out again before trading lower. Because now at this point, I'm not trusting trading away from a consolidation, because if we have consolidation and we sweep lower and come back in, that's what? That's bullish. So the main thing here is the closure is fine. It's just this is an absolute garbage structure. Yeah, no close below. Yeah. So that's what I would say on that. Yeah, exactly. The model is built to teach you MMXM without actually have to understand anything. Can you go over shorts on gold at 220? There. 2:20. What do you mean PM, AM? What do we think? These ones? Talking about this one? It's a valid short. If that's the one you meant. PM. Okay. 2:20. Is that 14:20? And what, you gotta tell me what time frames are you using? Maybe 3-minute? I'm not seeing a 5-minute. You mean this one? That'd be up here. You mean this? I guess I'm a little confused. 5-minute. So with the 5-minute, let's start on the hour. It's a bit messy. The candle 2 closure there, but it's a doji. One never sweeps out. So I guess you could say, hourly trading this continuation lower. Within my fractal model, there's not really much here to look at. So I can't really say much on this other than, I guess, structure-wise, you could say this, and then looking to trade continuation following this fair value gap here. I don't know if that works. But it'd look something like this. I don't know what happens. So it works. It's not something I would trade, just because it's sure the 5-minute structure, you can make it make sense. It's just the hourly doesn't make a lot of sense to me. Right, like that. Expansion, consolidation, we just leave that. Have I tried the coffee yet? I've had some like chai lattes, which isn't even coffee. Maybe I'll try today. My friend I'm with is saying that like the best coffee in the world. She drinks a lot of coffee though. How do you know the daily candle will end up like that? So I never know for sure something is going to occur, because if I knew for a fact something was going to occur, why wouldn't I risk all of my money on it? Right? So for instance here on gold, right? If I knew for a fact that this was going to drop right here, right now, why wouldn't I risk all of my money on this? You know what I mean? So I never know for sure that something's going to happen. The only thing I do is my whole model is based off of, hey, I have a daily closure. I'm anticipating expansion this next day. So really it all comes down to I'm anticipating it based off its previous closure to expand lower or higher. That's what it comes down to. So you pick your bias just off the daily chart? Yeah, almost always off the daily chart. And I'm just using daily closures, EQ, and phases of price. I don't really use weekly or anything like that. I'll occasionally look at the monthly because it's not that important. But the weekly I'm already kind of doing, right? So it's like I know that we made the upper wick here on the weekly. I had to sneeze. I know that we're making the upper wick here on the weekly, right? Looking something like this. So if I'm expecting this upper wick to hold, you see why I'm still bearish, because we've made the upper wick. Let me see if I can go to the 1 week. We've made the upper wick, so I'm expecting us to go here. That's why it makes no sense to me to have it leave those lows. Go back to the hour here. Why would this be bullish to me? It's not, right? It has the phase of price expansion met with expansion, but it doesn't make sense to me. And that's why with gold, I'm expecting us to go run this low, right? Which cool. There it goes, right? Would it have worked? Yeah. But I'm just trying to show you guys stuff that, yeah, it might not be every case, but it's stuff that keeps me out of trades or like losing trades, right? But this is, like I was saying, something that I would expect to go run the low. It's just what would have been a lot better. Something like that, right? Always little things that I can pick out. But if we would have done that and had a nice close, that would have made a lot more sense. Because then now we actually have it aligned. All right. Yeah, I'm doing quite a bit better. To be fair, I was like very burnt out, overwhelmed, just dealing with a lot of stuff in life. So, friend, and you guys are trolling. You guys, yeah, cool with you that. Right? But you guys see why I'm expecting that, right? Because does it really make sense to leave all these lows like that? It doesn't. And so I asked myself, okay, is it more likely to leave all these lows and trade back to these highs up here? Or is it more likely to go run out these lows? More likely to run out the lows. So if we're opening here, I expect it to be bearish. Then you can drop down to your 4 hour. I like to do 1 hour. Right? And then from here, there's no swing point to trade off of, right? So that's why I said, okay, I'll look at the 30. The 30 gives that swing point. Then you can trade it, right? But what I wanted to show you is these little hints on stuff that you could look at, right? Does it work? Yeah. Cool. But that's like I was saying, even if I'm really entering in here, where do I trust? I don't trust this high, right? This could sweep it out, right? Like price could come here, sweep out this high, and that's completely valid for me. That even makes it better, right? So if I'm short into here, where do I need my stop? Above here, right? But yeah, could do something like that. But does that make sense in terms of invalidation? So that's why I was saying this would be the most ideal. Something like that. And I can get 2R to that short-term target, 6R to the low. You took it? Nice. Maybe a stupid question. I'm still new to your model. You use the 30-minute as an hourly. So I don't really use the 7-hour much. I have it up because AM uses it and we get some questions on it. And it can be used. I don't really use it. It's just not within my model, really, how I trade. But I just use the 30-minute or the hourly as the closures. For today's candle and NQ disc, do you consider the full candles 50% to be respected, or the wick full candle? So we go back to NQ. Right. Let's talk about this. Am I tripping? No, it's just, yeah, I was tripping. Okay, if we're bullish, do we expect price to go trade all the way down into this wick and then all the way back higher if it's gonna move higher? No, right? We want to see a shallow wick. That's why I'm expecting it would be at most like a very shallow wick lower to then back higher. Right? Which generally, I'll show you guys something. You have a move like this that sweeps. You can use this opening price, and that's generally your order block. Not always the exact one, but it's pretty close. You use the disrespect of EQ and invalidations to firm trades in the opposite direction? Yeah, I will sometimes, but it has to be very specific. Let me try to think of an example I can show you. Yeah, it kind of has to be like, hey, we're failing, and then we have a previous day high or low near it. So let me think of what did gold just do? Nice. Yeah. Kind of crazy. What a spike down. Oh, see, looking at it now, this is where talk about something real quick, because with the teaching and going around stuff, I miss this real time. When you have something like this, where it's just not good price action in here, this closure tells us a lot. So who can tell me what this price action, this closure tells us? Because this is, let's look here and let me know. And then I'll get back to that last question. Not that. T3 click. Yeah. So perfect if you guys got that. So what we notice here, let's go to the 30-minute and I'll clean up the chart so you can see what I mean. If we are forming an entry sequence, it's going to form in what? A swing point and then closure, right? So this is the candle closure, right? When is this high confirmed? When we close below this level. What do we notice about this closure here? It closes below that level, so then we can anticipate 0.5 of the body to be respected. Then we go back to our 3-minute. Now we put on the indicator. We line it up and we have those levels. It makes a bit more sense, right? Once again, if I'm entering this though, right, somewhere in here, my stop needs to be slightly above this high. Right? That makes sense because it could wick it and still be fine. If I wanted to have more confirmation, that's when I wait for that intra-candle change in the state delivery, which then that can make more sense. And that entry would be there. The 2 are there. That makes sense? I wouldn't say it's super clean on the lower time frame. This is decently clean. Right? It's very valid. Right? It's just, I wanted to show you guys this. Because let's talk about it though, because there's a few things we can point out. Let's talk about this. What do I want to see? Well, I've mentioned it a few times. We have expansion down into this low. What am I going to look for? The short-term low taken is indeed dangerous. Yeah, so what we're going to go over is how to approach it if that occurs. That's what I'm asking you guys. What am I going to look? Yep, shallow retracement or consolidation. Very correct. So if we're still expecting this to trade lower, which we're talking about, I was really focused on trying to prove the point or show you guys what I mean with this in relation to the gold trade the previous days as well. But if this is gonna fail, what's gonna happen? It's going to expand higher, right? Expansion out, expansion back in, and it's gonna trade up. If it's gonna continue, it's gonna consolidate, get a continuation, or retrace, get a continuation. And that's why I was saying I wanted it to go here. Because if we expect a retracement, where do they normally go to? A fair value gap, right? So I look at this. Is this a very aggressive move back into the range? No, it's not. So can view that as a retracement, right? A retracement would have just closed below here though, and then dropped. So when it fails to do that, it's now a consolidation. And that's why I was saying, generally I want to see the high in the consolidation right now before the drop. Does it do that? No, right? So if let's say I wanted to make this, right? Like let's say I was making this market and wanted this to look better with this closure, what would it look like? I'd give this thing a tiny little wick in here. Like that, reaching into the wick of this, giving us a little something like that. And then I would have a wick drawn up into there, so it reaches into that fair value gap, something I can trust going into this next candle. The most ideal would have just closed over this, but if it doesn't close over that. Oh, okay, wait, 2 scenarios. Ready? Let's say it leaves it like this, then I want to see this, right? Because let's talk about this. This is a consolidation. Then I want to see it manipulated, right? Now let's say instead it reaches up into here and then has a close below. That's nice. Then I don't want to see this high hit, right? Do those 2 scenarios make sense? If it has a retracement and a close, I want to see this left and it continues lower. If it doesn't have that retracement and it just consolidates because it's failing to close below here, that's when I want to see the manipulation and then go. So then I want to see something like this. So in this scenario, if I was to change nothing, but just what I wanted to see, this candle right in here would have done that. Does that make sense? Like, that's how I think about it. Obviously, not perfect all the time. It doesn't do that. But does that reasoning make sense? If it's a retracement, closes below, I don't expect price to go run this high. This is choppy. I want to see it run out the high. Okay, cool. As long as that makes sense. Could you use SMT as a third scenario? Yeah, you can. But this is what I've talked about earlier as well. So many people get caught up on SMT that they forget about what the actual model is, right? So they'll be like, oh, SMT here, this, and they come up with a bunch of different reasons for taking something, and it's like you zoom back out and you're like, that made no sense. So it's like the reason I don't have SMT in my course or anything at all is because I found more people, at least starting out or in the beginning, get so caught up with SMT and get confused. They try to do too much and they just forget how the model works. Right? That makes sense? What about now? Well, now we go to the daily on gold. Where are we? We're below the low in the consolidation. So I asked myself, okay, we've expanded into this low. What are we going to look for? We got to let this daily candle close. Right now, this is still bearish, right? And what was I talking about? Running out some of this. So we can see that, right? Because that's a fine range. From here, it's more bullish to me, right? Because I'm kind of thinking in the opposite of most people, right? But I need to see a closure, right? To tell me if I'm going to try to long or anything like that. Right now, I don't know what's going on anymore, right? If I had to guess, still bearish, right? But my whole idea was I'm bearish to these lows, right? From when I got on the stream, right? So same thing with silver, right? Expecting silver to run out these lows. So maybe what I can do now is say, hey, I'm just going to be bearish on gold until silver runs out this low, right? Sometimes I do things like that. It's a bit different depending on correlation. But... So I just wouldn't look at gold today. Yeah, exactly. Like the whole thing for gold was I'm just expecting to go run these lows early on, right? Which is why I was saying, hey, I'm expecting gold to run these lows. Asking about the signature and the failure to, yeah, so it's like essentially it's you're saying if we're expecting, if we want to see a reversal here, we want to see aggressive down, aggressive back up. If it goes aggressive down and then retraces, what do we expect? Continuation lower, right? So I don't know what's going to happen. I just react. Yeah, I use drivers, but it's here's the thing is I've taught quite a few people now, right, to trade. And I know that when people fixate on things too much, they get confused, right? So people fixate on one thing and try to understand it, and then they get confused, right? So there's things that I leave out of my model that I'll use, right? Because I know if I put everything in, it's just going to confuse people, right? So it's kind of that, it's a hard balance between what do I all throw in and talk about versus it's just going to confuse people. You know what I mean? It's like if I'm teaching you math and you need to understand the basics of calculus. I'm not just going to start throwing Fourier series at you or some advanced math concepts, right? I'm just going to teach you derivatives and integration, right? To get you to understanding math. You know, that's probably the worst example I could have, analogy I could come up with, but so it's like, yes, I use drivers, and that's what I talked about on NQ, forming this low, right? I was saying, hey, it's going to form at 9:30 or 10. Why is that? Well, 9:30 is your driver. And then 10, we also have news, but it's that new 4-hour open. So if I'm expecting a reversal to form, I'm expecting it to form in those times. Because if it doesn't form in those times, and it doesn't, it's so late into the day that we are running out of time to make this move higher. But yeah, it's like as you learn the model more, it's like you pick up on things for yourself. it's like, I'm trying to give you the foundation and get you to the point where you can be successful. I'm not trying to make you, I don't know how to, like, I'm not trying to show you everything, because at that point, you're just going to get confused, break down, and quit. You know what I mean? Like, if I tried to show you everything, you'd be like, what? That doesn't make sense. And it's like, I don't need to show you guys everything, because 9 times out of 10, you won't ever use something that I show you, right? It's like 10 times out of 10, what I do show you is what you will use. Going over gold. I mean, to me, you're just trying to long something that's not bullish with 5-25. So let's go back here. What time did you take this at? 6 a.m., 10 a.m. Let's talk. Daily. Here's the thing I can say. It already formed, so let's go back to the hourly. Do this real quick. Okay. This is what I see. What does the daily chart tell us here? Is that bullish or bearish? This candle here. It is pretty bearish, right? Small wick to the upside, expanded lower. So one, it's already expanded. So sure, you can try to trade this back into the range, right? But at that point, you're kind of fading the daily candle, right? Now you were saying 6 a.m. a reversal, which sure, you can consider that. I personally don't with how I trade. The way I view this is I view it as, okay, the lower time frame reversal here, continuation lower, right? I personally am not seeing this as a reversal because it's just more of a doji candle or wick on both sides. That's fine, right? But for me, it's just very hard to trust this until I have a candle closure, right? So for me, I'm going to wait for like an hourly closure here. So maybe something like that. I was going to try to trade it. I don't know where you entered. Use 4 hour, use the 30. I mean, yeah. All right, so we'll go over his trade. But he used the 30, up to 3 here. Trying to enter long here, right? For me, it's just really hard to do that when the daily candle is bright red. Like I said, most of my losses come from things like this, where it's like, hey, the daily candle's bright red. I'm not good at trading these reversal candles. I don't like trading reversal candles. I like trading stuff that, like if this is here, I like trading around the wick of this and trading it lower. Like I don't like trading it back into the range generally. But I mean, yeah, it's a valid structure. Like the structure on this is fine. I think just mainly what it's lacking is your 4 hour. Like this isn't a reversal candle to me. Pretty bearish still. And then the daily's bearish. So it's like if I really want to trade this, I'm not trying to use the lower time frame. I'd be, hey, let me wait for an hourly closure. Because this hourly is still very bearish to me. That's not bullish. Here's the first candle that we have that is bullish. And I could go to the 5. Okay. Okay. We have the closure. We do. I would personally be using this. Okay. Want to see open low, high close. See if we can run out these lows. That's fine. Shall we be cheeky with it? Why not? show you this is what I could do with like very low size because I'm expecting to get stopped out here. We're up in there. Something like 7R. See if I get stopped out. Ooh, stopped out. Now it probably goes here. Okay, but it's a bit late in the candle. So then I just let the next one form. Let the low form. There. The second attempt. Right around 2R. Right. So you can see this is like that risky entry because what? It's just based off of a little sweep in a candle to closure. We would have had to confirm that right away. We don't, and then at this point we're consolidating, right? So then when we are consolidating, what does it do? It needs to run out the low in the consolidation, which is where it stops us out. And then that's where I realize consolidation, sweeps. Once we close over here, it's then valid. Why would I wait to take this entry? Well, if I had to take this, I would be taking it positionally there, right? Which works, but I'm just gonna let this wick form. So then we have an open, we trade this lower. I know if this is gonna hold, this next candle or so needs to form a swing. It closes right over. That's an ideal candle to closure. So then I can long this open of this next candle with my stop on the current, right? Which, because you're essentially trading this, right? That makes sense. How am I approaching indices tomorrow? We'll see. Really not much for me. I'm not a fan of trading these type of days following a very massive range. Going in Q so you guys can not, I guess it's not that. It's hard because that's a big range. Just doesn't look that big because of these massive days. But really what I would say is I'm expecting a continuation to this high on indices. How do you differentiate between a breakage structure from a shakeout or a personal? And so I don't really use breakage structure, anything like that. Yes, 1 hour candle. So I don't really use stuff like breakage structure or liquidity sweep. So like I'm not looking at this or looking at this as a breakage structure as like a retracement to a continuation. My model is just more so aligning timeframes and trading swings in that direction. I don't know if it's hard for me to answer that because like I don't use breakage structure. And like a liquidity sweep, I just view it as, hey, we're in this range here. So I'm not looking at this as like a closure to say, hey, this is a breakage structure to continue lower. I'm viewing it as, hey, let me see what these next candles do. Does this retrace to continue lower? Does this expand back in to trade higher or what, you know? If you want to focus on reversal candles, just really focus on the easy ones. Like, just find candles that look like this one. Like that's a reversal candle. Don't try to find stuff and like make it that it's not there and you're trying to make it there. You know what I mean? Like don't look at a doji and say, oh, this is a reversal candle. Right? Just focus on the very obvious ones. I think I struggle the most with entry. Have you learned my fractal model? Because it makes it fairly mechanical. Oh, nice. Gold is actually and then you just jump the gun. Yeah, so I'd say just be patient. Like you'll realize, I think a lot of people with the model is they get so ahead of themselves, they try to get in, then they knock themselves out, and then they look back at it and they're like, wow, it's so clear. So how to avoid that is stop trying to watch every candle make move, right? Just sit here and let's say we'll just go on the 5 minute. Let's say here I'm on the 5 minute. Stop sitting here and watching every little tiny movement in this 5 minute window, right? Just sit here and if you have to, set an alarm every 5 minutes. Okay, check that. Let the next candle close. Okay, what did it do? Let the next candle close. What did it do? Right? Because if you notice, if you're very good at back testing or like going through trading view replay, it's because you're making decisions based off these closures, right? And that's because you're using the actual information versus when you see it real time. At one point here, this candle, see if we can go back here. This candle was bright red. Ready? This next one. People see this and they're like, wow, that's very bullish or bearish, right? And then they start to chase or like make a decision. They're like, oh, I don't want to miss it. It's going to close below here. I'll go ahead and just take it. Oh, no. Why didn't I wait for the closure? It's like, stop trying to make decisions based off of inside like movement, right? Just let the candles close and tell you what it's doing. When I wait, I'll see it run and I'm like, damn, I missed the move and force entry. Yeah, so just set a timer for the end of each window, right? Like right here. I don't care what this candle does until when? 2050. Because how does it close? I don't know how it closes. I can't predict the future. I can sit here and wait until it hits 2050 and then I can tell you how it closes. Right? So like if you got no clue where the next daily candle wants to go, you drop. No, I don't drop down to the hourly. I just skip it. Like oil. I talked about it a little. I don't really know what oil is going to do unless it forms a reversal off here and trades back up inside. I genuinely have no idea. I'm just not going to look at it most likely. If I wanted to, I can set an alert here. Maybe I'll do that. Right? Because that's where it'd have to form a reversal to trade it back in. Oh, yeah, waiting for the macro. I just closed trade on gold because it was in a little drawdown, but my TP was 32.58. 32. Oh, wait, you're on. Oh, you're trying to long gold right now? Where am I used? He's the guy talking about macros. Joking. No, I short really early. I mean, it just comes down to following your plan. You know what I mean? Like if I'm shorting gold in here, I stop here. People are so much better with price. Like they'll be fine with price just stops them out. They're like, all right, cool. What they hate is when price does this. And then they're like, okay, I need to close it. And then it goes. It's like if you accepted the fact that you're risking this amount when you put on the trade, why can't you accept that you're still risking that amount after it takes a little bit of time? You know what I mean? So at the end of the day, you just have to follow your plan. All right, guys, stop trolling, please. If people ask you genuine questions, please don't troll. That actually kind of annoys me. Like it's one thing if you know everyone's trolling, but people are trying to learn and you troll. It's just not a good environment, so please don't do that. I have a hard time trading the afternoon session, specifically indices. Is it a hard session to trade? Yeah, I would say I never trade PM session, like ever. So I can't give much emphasis on how to go about it other than I would just trade the 2 p.m. candle. That's it. How much emphasis do you put on SMT? Talked about this a little. I use it as a confluence, but it's not my model. Like I don't need it to form, right? For example, we go to gold right here. You guys watched me anticipate price going to here, right? Do I need SMT to understand that? No, I don't. Can it be a confluence to entries, stuff like that? Yes, it can. Right. So I think we'll probably wrap up the stream here. I don't know how long we've been going for. Hour and 30 minutes. A bit of a longer one. Hopefully you got some insight, some experiences. You know, see, it's a genuine question. Macros aren't real. So you guys, this is what I mean with trolling is you guys think it's just funny, but you're actually confusing people who are trying to learn. So please stop with that. It's, if you want to troll, go do it somewhere else. I don't use macros. They were just talking about a joke. So. All right. I think, what are the other types of SMTs besides highs and lows? I mean, everything's a high and a low. You can have an SMT and a fair value gap, but what is a fair value gap? It's just a high or a low, right? So like, let's say we have SMT in this fair value gap. That's just an SMT off of this high. And so we go down to something like a 1 minute. Right? It's just off of a high or a low. We might have to go down to a lower time frame for that to actually show up. Right? But it's just off the high. So that's all highs and lows, but I would only use them in highs and lows or fair value gaps. All right. Let me, let's do my analysis for the day real quick. So we'll see. I think, yeah, I think I'll end this stream and I'll just drop the analysis in my chat. Or maybe I'll just do it twice, whatever. So that way the stream has it as well. All right. So analysis for today. Right here with gold, we're getting what we wanted. We wanted to move through this consolidation low. Can also be looking for these failure swings below here, right? If we really want to dig deep into the range, I can see us even going to here, but I wouldn't expect that today. That would be likely a next week thing. Unless we really break out, sometimes gold does that, but that would be a next week thing. So gold, still bearish, except it's already hit the objectives I wanted, right? You guys, we basically talked about that live time, so hopefully that was helpful. Silver, expecting it to run those lows like I was talking about, right? It doesn't make sense that we leave these lows, right? So that's why I'm still bearish. And you know how I was talking about, hey, if I wanted to, I could be short gold until silver runs this low. And let's see, we're on the hour here. It just makes a very aggressive move. That's fine. Let's see if there was a quick setup. Nothing on the 3-minute that I would be taking. You could take a positionally, it just doesn't really make sense. I like gold better in this scenario. Okay, so bearish on both those. More so until it hits its objective. And then the only spots for that to reverse off of would be 0.5 of this wick. But I would I'd more so be interested in it reaching for here, right? Similar to gold, a little bit more downside. Oil, not very interesting at all. We do have the possibility for a Thursday counter weekly profile. We have expanded lower from Monday, Tuesday, Wednesday. We retch into those objectives I was talking about yesterday, here and here. So we could see a move back into the range, but we'd need a reversal formed off of previous day low to trade that back inside. RB, not really even looking at it. Yeah, it's just not very interesting to me. As for indices, looking for a continuation higher into this high here, right? And we have that consolidation, sweeps these lows out. This is the move I was focused on, right? The reversal's formed. I went to bed because I'm in Asia time right now, but forms a reversal, very bullish close, looking for a continuation higher, right? So any questions on the analysis there before we hop off? Gold took it, waiting all week, couldn't capitalize. It happens though, right? Oh yeah, it's actually starting to go there. Nice. So you guys can kind of see now, like we talk about, like AM and I even had this conversation this morning, or for him this evening, where we were on a call during Asia session in here, and I'm like, gold is going to dump. And it's like for him, he's like, yeah, I don't see that at all. Or like he doesn't see it because it doesn't align with his model because we're internal here, right? And I was explaining like, yeah, it's just, I don't know how to explain it, but it's gonna dump here. So hopefully you can see how there's little clues you can use when you're inside a consolidation to anticipate the breakout. It's just, it's not for everyone, right? So I don't know what I'm trying to explain there, but oil is to print a daily wick low and have a 1 hour intra-candle change in the state delivery. Could you consider longs? Sure. You'd be trading the reversal day. Usually Friday's just easier, but that would be under the anticipation that we're going to form go to the weekly candle. That would be under the anticipation that we're going to form a reversal here, and then we close back up. So I don't know. I always just prefer for the continuation day, so I prefer to just let this trade and then trade the continuation, or if it does nothing, do nothing. Questions for touch a bit on letting the wick form. I mean, so it's just, let's just go back to silver, a good example. Yesterday. So if we're anticipating silver to go lower here, right, to these lows, I'm wanting to see the daily candle make an open, high, low close. Does that make sense? Yeah? Okay, cool. So if price is going to make an open, high, low close, I'm expecting open. This is going to form the daily wick. How can I anticipate this wick to have formed? Well, if it opens, makes a high, has an intra-candle change in the state of delivery, that then allows me to anticipate that this wick should have formed. So we go back over here. We have price opening, right? Expansion, opening, retraces into a point of interest in that T-spot, has the intra-candle change in the state of delivery. So now I can anticipate that this wick has formed. And then I can trade lower off of that for the rest of the day. Right? So once the wick forms, now I can anticipate the body to expand lower. Right? That's the whole concept. So thinking about NQ, were you expecting more of a lower wick to form? Kind of like I said earlier in the stream, I don't really care. I'm not going to trade this higher because it's just not something I'll take. So I'd be more interested in running out the objective and then trading the retracement back into the range. So it's just like you learn what trades are yours. And even if I can anticipate this move higher, it's just something I wouldn't touch. Any considerations for the day before NFP? Not really. I'm only more interested in not trading right prior to NFP. I also had that question yesterday where people are like, why would you trade prior to GDP? And it's like, it's GDP. It's just news. So, but we are, I think you can see on my screen, low battery. But we are going to go ahead and the stream there. I'll get that uploaded. Hope you guys enjoyed. Have a great rest of your day, and I'll be in chat. So good night to you in America, and good day to everyone else there. And if you're in London, you're most likely asleep. So see you guys.